tracking on trading hour this morning. Gujarat PSU stock surge in trade. This after the state has announced a new policy for minimum dividend distribution and bonus issues as well. Sonal joins us with all of the details. Sonal, take us through what this new policy really looks like.
Thank you so much for that. Well, yes, all these stocks are in focus. Gujarat government has gone ahead and announced a new policy for minimum levels of dividend distribution that can be done for the shareholders and bonus shares for PSUs as well. Let me run you through each of those segments. For dividend payout, for instance, the minimum level of dividend will be 30% of PAT or 5% of net worth, whichever is higher. That has to be given out by the company, and only minimum and maximum dividend payouts can be done. That is the range basically in which a company can give out dividends to the shareholders. In terms of buyback, PSUs which have a net worth of at least 2,000 crore rupees and cash and bank balance of 1,000 crore rupees can go ahead and should actually, it's a thing that they have mandated for these PSUs to go ahead and do the buyback as well. In terms of bonus shares, the defined reserve and surplus should be more than 10 times of the paid-up equity share capital, which is the case for most of these PSUs. In terms of share split, the market price or book value should exceed 50 times of its value as well. But again, all these parameters do not go along with all the listed companies as well. It's only GNFC which can do all these things to enhance shareholder return as well. So running you through some of these numbers, the list is for you on the screen, all the Gujarat listed entities. Let me run you through individual numbers as well. For Gujarat Gas for instance, they have made profits of around 1,300 crore rupees in FY22 with net worth of 5,600 crore rupees, which makes 5% of net worth at 280 crore rupees, 30% of PAT at 386 crore rupees, but they do not have enough cash in their books to pay out such kind of a dividend. And so far, their dividend payout has been around 11%. For GNFC, as I said, they will be able to do all the above criteria that I just mentioned, because according to the formula, 5% of net worth is around 400 crore rupees, 30% of profits is around 511 crore rupees, and they do have substantial cash in the books around 1,200 crore rupees. And even in terms of bonus and buyback, they do meet the criteria which is prescribed by the government. For GSFC, they have a cash of around 300 crore rupees, net worth is on the higher side. So according to the formula, they can either pay out 600 crore rupees or 267 crore rupees, whichever is higher. So yes, that is a positive for the shareholders, but their cash in the books is capped there. Gujarat Alkalis as well, they have a cash of around 300 crore rupees and they can pay out maximum of around 300 crore rupees or 170 crore rupees to the shareholders with a profit of around 600 crore rupees. GMDC2 has enough cash in the books around 1,200 crore rupees. Again, it is as on FY22. They can pay 5% of net worth, which is around 236 crore rupees, or 30% of PAT, which is around 31.5 crore rupees. So yes, GNFC is the one. That is where the shareholders tend to benefit the maximum, followed by the likes of GSPL and GMDC in some cases. So it's not equal for all the listed entities as far as the Gujarat government's holdings are concerned.
Sonal, thank you very much for that detailed analysis. But across the board, stocks are flying today. So GIPCL is up 15%, GSFC 12%, GMDC 10%, GSPL is up 8%, GNFC is up 6.5%. Gujarat Gas is the only one which is trading pretty flat. To take the conversation forward, we're now joined by Deepak Shenoy, founder of Capitalmind, to take some questions. Deepak, you heard the analysis that Sonal put up. You've done the numbers yourself. Let's tackle this one by one. In the case of a buyback, is it just GNFC which can announce a buyback, or are there any other companies eligible for a buyback in Gujarat?
So it turns out, Rima, I think you can do, based on the September numbers of Gujarat State Petronet, they might have 1,000 crore plus cash at the end of the year. So if they do, they might have to qualify for the buyback and therefore do the buyback as well. I think they also qualify for a higher dividend. They've been paying less dividends compared to the 30% required. So the two clauses for them and in terms of the buyback, GNFC and Gujarat State Petronet might have to do a buyback. Depends again on the numbers we see in the March quarter.
Okay, just to reiterate that, GNFC and GSPL, Gujarat State Petronet, so they meet the criteria and they will probably have to up the returns to the shareholders by way of either higher dividends or a buyback. That's the point, Deepak?
Both actually, because it doesn't say either. The thing says pay 30% plus do a buyback.
Just one more question. You said GSPL has been paying a lower dividend and now they will need to increase that. based on the formula. Can you give us the numbers here for GSPL and even for GNFC?
I think their GNFC has been paying, well, I think they paid 10 rupees per share last year. They can, I mean, in the formula, they should be paying something like 30 rupees per share.
Okay, Deepak, your line was frozen. So could you repeat the numbers for GNFC? You told us the company paid 10 rupees of dividend. Based on the formula, they can pay up to 30. What about for GSPL? What are the dividend numbers looking like?
GSPL was 2 rupees, I think, and the potential dividend can be upwards of 12 rupees, depending on the profits trailing 12 months. But again, this is tentative. I don't know the March quarter results. Things may change, but by and large, these two companies and most of the others also may have to up their dividends a little bit. Remember, of course, that dividends, even though the formula may say that they have to pay 30%, they don't have enough cash in the bank. They can actually borrow money, increase their debt and pay dividend. And many of these companies have very low debt, so they can actually increase their debt levels if they have to meet the criteria. So it depends on what that, whether they're allowed to take debt more or not.
Okay, got that. Thanks for joining us. The other announcement that has come through is also on the splitting of shares, right? Where the market price or the book value of the PSUs exceeds 50 times its value. What is the study here? This should also work for GMDC, right?
Yeah, I'm actually not keen on analyzing that because bonuses and splits don't add any value to shareholders. They just move equity from, something from a shareholder's equity is just consists of just capital, share capital plus reserves. If you move something from reserves to share capital, it doesn't do anything, just changes items on the liability side of the balance sheet. So for a shareholder, it does not add any value at all. People think of bonus shares as a positive, but I don't know why. It's just the same, exact same as a split. It doesn't do any difference in valuation to the company. So yeah, they could give bonuses till kingdom come, but I don't think it's going to make a difference to our stock, our analysis of the stock.
Okay, yeah, got that. It just makes you feel better that you have more shares and hopefully they all go up and then you get wealthier, right, Deepak? Okay, so, summing all of this up now for shareholders, there's obviously pure fundamentals attached to these companies and, that continues to be a driving force. But purely going by expectations of higher dividends, basically better cash payout by these companies, which stocks would you look at buying? I mean, a lot of people buy stocks only for great dividend yields, right? So which ones would make the cut for you?
Actually, I don't think they're great. So by the way, all public sector enterprises have to pay 30% of their profits as dividends. This is central government owned PSUs. So now the Gujarat state government has done it. So the dividend policy has kind of been synced with the central government. So I wouldn't buy these stocks for dividends other than maybe like a Coal India type company, which has such a monopoly that it continues to generate dividends. So it's like if it was giving me a better yield than fixed deposits, because fixed deposits are taxable, dividends are taxable, then yes, you'd buy them for dividends. But otherwise, I don't think very attractive. Maybe for buybacks, you might see an attractive opportunity because when you reduce the amount of total shares available, the earnings per share of these companies grows. So if you have a reasonable growth rate of even 10%, you will end up with a higher earnings per share growth simply because of the buyback. So that might make some attractive. Again, the only companies that meet any of our criteria are GNFC and GSPL. But we don't own any of them right now.
Deepak, but other names like GIPL, that's Gujarat Industries Power Company Limited, you've got a GSFC, which is moving up, you've got a GMDC moving up, and all these stocks are up in double digit. Do you think the up move is unwarranted in these cases? It's not going to move the needle in terms of shareholder returns?
Yeah, I mean, the stock markets react to, information either sometimes half-heartedly or assuming too much and all that. So, you'll find that the move will fizzle out once they realize that these companies are not capable or cannot pay or will not be able to pay because they don't qualify. So yeah, some of these companies, the move is unwarranted, but we have to also consider that some of these companies may have been beaten down in the past. So maybe this is just a trigger for some people to reconsider them. So that's why it's gone up. But either ways, I don't think one should just buy on this news. Should wait for confirmation from the companies and the March quarter results, because, strange things can happen. So, and many of them are just borderline.
And just one more question. Is this a first step towards divestment? Would you read it like that?
It's interesting, though. I think it'll help towards more corporatization. I think one of the things that these companies, a lot of steps have to be taken. They have to corporatize their structure. Many of them have deposits, for instance, with a state-owned finance company that has, 100% NPAs. So, all of that structure will not sit very well with a private investor. So you'd have to kind of clean up a lot of things before they do that. I hope it's a first step towards increasing private participation in some of them. But I mean, actual disinvestment, given the last 10 years, I would just say, let it happen, show me the money, and only then I'm going to believe that it's happening. So good steps, but yeah, I mean, much more will is required.
Got that. Well, at least they're showing you the money in the form of higher dividends. It's a starting step, perhaps. Deepak, always great to have you. And thank you very much. You made some very, very important points, so worth keeping in mind. Thanks for joining. And we'll take a quick break on that note. On the other side, shift the focus to commodities. We'll ask Manisha Gupta what the headlines are in that universe.